Last year's average tax return was over $3,000, quite a bit of money. Before you rush to file, there are some important changes that could impact the size of that refund.
Financial instructor, our good friend Michael Masserant from the Retirement Education Foundation is here to discuss those key changes, what we need to know and be as tax efficient as possible. So, Michael, first and foremost, what are some of those key changes? What do we need to know ahead of April 15th?
So one of the biggest changes doesn't impact everybody, but for people who are providing services, goods or services, and collecting payments over Venmo or PayPal, typically smaller businesses, the threshold in the past was $20,000. If you didn't have profits of more than $20,000, you weren't really required to report all that income. Now the threshold's $5,000. So it impacts a lot more people who are smaller businesses providing goods and services. But really, for a lot of people, the taxes aren't changing too much. The standard deductions are very similar. The tax brackets are very similar. They both got small bumps for inflation, but people's tax bills this year should not be too much different than they were last year.
Michael, just square one question here. Should people always seek out help, or can people get the TurboTax software and do it themselves successfully?
It's a great question. So for a lot of people, taxes are relatively simple. Most people have relatively simple tax returns. Most people are W-2 employees. They get their W-2 at the end of the year. They plug those boxes into TurboTax. It spits out maybe you enter some interest from your savings account or some capital gains. But for most people, it's relatively simple. Now, if you're a 1099 employee or if you own a business, it gets much more complicated much quicker. But for those W-2 employees, it's pretty straightforward.
Also, the write-off, sorry, Ryan, just one more follow-up question to that.
Please.
The write-offs have changed, not this year, but in recent years, it's your limitations or that threshold, right? So that's kind of less important, right?
So almost 90, maybe even higher, maybe 95% of people take the standard deduction. And this was a big change with the Tax Cuts and Jobs Act. They increased the standard deduction that everyone gets for free. So every single filing tax filer gets a little over $14,000 per year of standard deductions. Every married couple gets a little over $29,000. So unless you have itemizations above $14,000 or $29,000, you're taking the standard deduction. Meaning, in the past, if someone donated, $8,000 a year, $10,000 a year, they could write that off. But that $10,000 per year is not larger than your standard deduction, so you're getting no benefits for that anymore.
Taxes in and of itself just feel like such an overwhelming, I don't want to say burden. I mean, we got to do it, but it's just very complicated to do. And even to the point of, okay, we're here, I'm at a job that I get a W-2. What do I put on my tax form to get, as
because you want to break even, right?
That's what I'm getting.
You don't want to get
close
a bunch
to even
of money
as
back.
possible.
And this is one of the huge, misconceptions. People get a big tax refund and they're happy. And sure, it's great to get the money back. But if you're getting a significant tax refund, especially every single year, that means you're making an interest-free loan to the government. That is your money that you should have been getting throughout the year. So if you're getting $5,000, $10,000 back in your taxes, that means you got $5,000 or $10,000 less in your paycheck throughout the year, and you made the government an interest-free loan to hold your money until you get it back when you file your taxes. Ideally, we should be trying to break even. That's if we can hit the sweet spot and break even, that's perfect. Now, everyone's different. If we're going to miss by a little bit, maybe miss a little high and get a small refund. Because the challenge is that if someone owes every single year and they're unaware of that, that might catch them off guard, and they might not have the funds ready to pay the tax bill.
And that all comes down to exemptions? Is it that? I know I'm oversimplifying it.
It comes down to exemptions, what tax bracket you're in, how much you have withheld throughout the year. Are you itemizing or taking standard deductions? Do you have child tax credits? There's a lot of pieces that go into it, but that's where the software, the TurboTax and the H&R Block and everything, they've gotten pretty advanced and pretty good at walking you step by step by step, asking you all the questions to prompt you, do you have any of these situations going on, to help you file the taxes.
So if you're getting a few thousand back, maybe rethink those boxes that you're checking, so that you're not, unless you like getting that. I know some people like getting that check at the end of the year.
So for some people, it's almost like a forced savings. But honestly, if we can be a little more disciplined and have less withheld throughout the year and save it on our own, save it into a retirement account, save it into an investment account, it'd be much, much better for you in the long run.
Michael, is the benefit of filing early to avoid a greater risk of the identity theft?
So there's two main things. Number one, there is a risk of if you delay until the 15th to file your taxes, there are some frauds and scams where people file your taxes on your behalf.
That happened to me in 2011 or 2012, actually.
It's a nightmare.
I owed money to the government, and they sent a check in, got the check back. We've already sent you a refund check.
Oh my God.
It was a absolute nightmare.
It's a nightmare because most people, on average, the average tax refund is $3,000. So they're filing the taxes not to do you a favor, but because they think that you might be getting a refund and they want to get that refund check instead of you taking it. So that's number one, is making sure that to avoid the identity theft.
That's amazing to me that people can get your specific information and file your taxes and get your refund that you don't even deserve.
What was even a bigger situation to me was, you're the IRS.
Yeah.
You're the government.
Right.
You don't know who you sent that check to go get that person. Like, where did you send that check?
It's a nightmare. And the second reason is that if you are getting a refund, why wait until the middle of April? File your taxes as soon as possible. Get that refund now.
What if you owe?
If you owe, that's a reason to maybe delay to make sure you have the cash on hand to make that tax payment. But this is also where if people are filing their taxes, if you owe a lot or got a huge refund, this is a great time to start planning for your 2025 taxes. If you got a huge refund, if you're about to get a huge refund, maybe let's reduce your withholdings and save more into your retirement accounts. If you're in a high tax bracket, let's save to a traditional 401k or an IRA. If you're in a lower tax bracket, save to the Roth. There's so much more to taxes than just preparing the taxes on an annual basis. Let's do some tax planning for the future to avoid these problems.
Get yourself some financial literacy, ladies and gentlemen. That part, refedu.org is the website where you can find Michael and a great team. refedu.org, Retirement Education Foundation.
We learned so much, Michael. Thank you. We went way over time, but it was worth it.